After months of consistent tightening and hold, the Central Bank of Nigeria's Monetary Policy Committee has taken a new path. In a decision that may appear surprised by analysts, the committee, at its 302nd meeting, voted to cut the
The
benchmark interest
committee
rate from
decided as follows.
27.5% to 27%.
1.
The move, according to the committee,
Reduce
is a direct response to a sustained period of disinflation, projecting that inflation will continue to ease through the rest of 2025. According to CBN Governor Olayemi Cardoso, by lowering the policy rate while tightening liquidity controls, it is striking a balance in form of supporting growth, sustaining disinflation, and protecting financial stability.
The committee decided as follows. 1. Reduce the monetary policy rate MPR by 50 basis points to 27%. 2. Adjust the standing facilities corridor around the MPR to plus 250 to minus 250 basis points. 3. Adjust the cash reserve requirement CRR for commercial banks to 45% while retaining that of merchant banks at 16%. Also, to introduce a 75% CRR on non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%.
The MPC also made other significant adjustments to other parameters, while the cash reserve ratio, which means the amount of bank deposit with the Apex Bank, was raised to 45% for money deposit banks. That of the merchant banks is now retained at 16%. By increasing the cash reserve ratio for deposit money banks to 45%, the MPC is essentially tightening liquidity in the banking system, which means that nearly half of commercial banks' deposits must now be kept with the CBN, leaving less money available for lending.
Decisions of the MPC.
On the other hand, the liquidity ratio, which is the minimum percentage of liquidity assets that banks must hold relative to their demand and time liabilities, is however retained at 30%. But how did the committee arrive at this decision?
The committee reviewed key developments in the global and domestic economies. The committee's decision to lower the monetary policy rate was predicated on the sustained disinflation recorded in the past 5 months, projections of declining inflation for the rest of 2025, and the need to support economic recovery efforts.
With this latest move, the CBN says Nigeria's monetary policy is entering a new phase to support recovery. But experts say the MPC must remain vigilant by balancing the need for economic stimulus with price stability. The next MPC meeting is expected to hold November 22. Frank Omalape, Arise News.